Hello and welcome to another lesson. I hope you are well. Now, in this lesson, what I actually want to talk to you about is kind of an expansion on the last lesson, but more so something to do with time and the way that basically time and quarterly theory essentially would match up very, very well. Now, if we look at the way of the cycles in terms of quarterly theory, we understand that you've got cycles leading up to four, and each quarter essentially we're now going to call a cycle in price. And as mentioned, I'm a bit skeptical when it comes to trying to watch for accumulation, manipulation, distribution, and continuation, as taught on the last video, in the certain order. But one thing we do know is that we can definitely expect some form of movement and then a change of movement in the next cycle, because price can't just continue moving to the upside forever. We do have to, at some point, get a bias. We do have to, at some point, get a move. And identifying that accumulation, manipulation, and distribution is one of the best ways to essentially find a way to engage with the markets. But in relation to something else, which I believe is extremely important, it's all to do now with time. And I'm just going to make this a little bit smaller just to make this easier to understand. Now, time and price is everything. We've kind of done the price aspect, but we need to do time as well, because what you have with anything is an opening price, an opening range area. And this is one of the most important things, because like with anything on a given day, you have an opening price. Now, you've probably heard or been referred to with something called midnight New York in terms of the true opening price. And so many people have referred to this. In fact, millions of people refer to midnight New York as the opening price. And to someone in the UK, that would be 5 a.m. UK time. Now, that opening price in relation to when an actual candle opens is not the same price, because this could be a daily candle which is being printed, and we want to try and buy anywhere inside this wick. And the reason we want to do that is because this is your candles opening area. This of course is a bullish example. Now we want to try and frame buys in this type of area here, so that price action can basically reach to a lower level and come lower, and then offer us an opportunity to move higher. Now, what we're trying to gauge here is an area. In this example, this is a bullish, bearish example, because price would essentially come above where this particular candle opened. Now, the algorithm refers to New York prices in terms of volatility, and we have always been taught that the opening price is midnight New York, which is 5 a.m. UK time. But let's just focus, because the algorithm does generally refer to the New York prices. So I'm just going to try and use this in standard Eastern time. Something you have to be aware of is why we utilize the opening price as midnight New York. So this is the daily opening price. But as you can see here on this live candle, we've got the opening price starting, and here you can see my cursor, at 5 a.m. UK time. That is midnight New York. So the general consensus with this is basically, for buys, you need to be below the opening price, and for sells, you need to be above the opening price range. So long story short, we are in this example now above the midnight New York price range, meaning it would not be very fruitful to look for buys, because we're already above. We've already had this huge move here to the upside. What we actually would have wanted was price action to come a little bit lower and then to find an opportunity to buy higher. Now, we never got that opportunity. This is a live chart. We never got that opportunity. And you can obviously see that price action is pushing to the upside in this area. So in this real life example, I feel like this could be the wick. So where we've kind of started, oh, I just hit the wrong one. Where we've kind of started here, the wick would be somewhere up here at the moment. This would essentially be what the candle looks like. So your daily candle actually looks something like this. And then the idea is that this is going to drop lower, meaning that we can potentially grab hold of this wick being above the opening price level. And the end of the day, you would have something like this. Now, again, opening price, there was no particular opportunity to buy under here. So it looks like a no trading day at the moment, unless we get a reversal move, in which case you may be able to get the top part of this move lower, but it's not as high in probability. You need to really be identifying a bullish environment or a bearish environment and trying to trade in direction with it. So being a part of this move rather than a small move down, if that makes sense. So where does this opening range come from? Now, cycles, I want you to basically imagine this here is a daily cycle, as in one daily area. Okay, so this is a daily, this is the day area. So the first cycle will always begin at the same time every single day. And that particular time zone is, I'm just going to kind of, and I have attached all of the relevant times relevant to this. Now, the midnight New York zone is not going to be at the start of our day. The actual opening is 11 p.m. UK time, which is actually going to be 6 p.m. Standard Eastern time. And then that cycle, bear in mind this is a day, will finish at midnight New York time. So that will be midnight New York, basically. So that is the first cycle. Now, the cycle after this, the second cycle will basically start straight away. That'll be midnight New York, and then it will basically finish again at 6 a.m. because we've gone from midnight. The next cycle is going to here finish at 6 a.m. Eastern. And then your third cycle right here is going to be from the hours of 6 a.m. Eastern until 12 p.m. Eastern. Does that make sense? So after that, we're going to go for the fourth cycle, which is going to be 12 p.m. Eastern until 6 p.m. Eastern. So therefore, you can now see in a daily cycle, we've started at 6 p.m. and it's actually working all the way around. So it's a 24-hour clock. So each daily cycle is split into 4 times 6 hour cycles. Now, again, we understand and we know that looking at this here, the first cycle is what we basically utilize as the Asia range. And then the second cycle we are utilizing as the London range. The third cycle we are utilizing as the New York AM range. And then the last cycle we are utilizing as the New York PM range. Now, something you now need to understand when it comes to price is, let me just try and change this. There we go. I just want to try and fit all this in so I can get you a nice screenshot. Because this price now, this price action that you see, and this is a very, very important piece of information, because we have the opening range, which essentially the argument could be, well, if the candle prints, because this is a daily candle, the candle prints at 6 p.m., meaning this candle's actual opening price technically is 6 p.m. Eastern, technically. Okay. But we don't use the 6 p.m. Eastern, we use midnight. Well, the reason that this happens is because we are referring to the true day open. Okay, so we will use the true day open as our opening price. Now, the true open of any cycle are always the start of the second cycle. What that basically means is you've got 4 cycles right here. That means that the opening price that we are using is actually the start of the second cycle, which is midnight New York opening price. So the algorithm will basically look to frame sell positions above the true opening area. So this would be the true day open. And then you would look to frame buys below this particular open, just as an example. So this here is actually where we started. So this right here is actually 11 p.m. That is this opening range. I'm using UK time on this candle. Well, this here is the first cycle. That is the Asian range. The next range will finish. The next cycle will actually finish at 11 o'clock, which again we know is 6 a.m. Standard Eastern Time. And it'll go all the way up until 5, and then it'll finish once again at 11. So this here is actually one whole day's worth of price action. It should, have I done that wrong? Until 5. There we go. There's 11. So if you see here, miles wrong. So that, it would actually be here. That's just a futures thing. But anyway, what I want you to focus on now, these specific cycles in price. And you can see that this daily area has this opening range at the start of this cycle. That is how all of these influencers, all of these famous traders, all of these people, they have discovered and understanding it, that the opening price starts at midnight New York. That is what the algorithm is referring to in price. So now we know, and this here, what you now know, only a very small percentage of people are aware. They understand that the opening price that we use is the opening price, but they don't understand where and why and how the opening price came to be exactly what it came to be. And that is there, the opening price range. So this is something I generally really like to utilize with regards to quarterly theory. It's helped us understand where and why we utilize the second cycle. Now, in terms of, yeah, but why why did they create it as the second cycle? It's just the way the algorithm refers to price. The algorithm isn't necessarily bothered about the range created in the Asian session. The algorithm is bothered about the liquidity that it can generate in the London session and in the New York session. And it will always try and frame buys below it and sells above it. There are obviously times when you can buy and continue moving higher, and you can sell under and continue moving lower as well. But the highest probable scenario would be that we would look for sells because we are above it right now. We would then hope that if price come lower, we would then be looking for buys. So a very, very simple rule that you're going to induce onto your trading plan will be to always try and sell above this true day open, and always try and buy below the true open as well. And what we can actually do here is go even deeper, because we are able to split one 6-hour cycle. So this here that you can see is a 6-hour cycle. That is your New York AM session. That here is the cycle, which is cycle 3. So now what we're actually going to do here is split this up again, because we started at 11 o'clock, which we know is 6 a.m. Standard Eastern Time. So this is UK time. But then we are literally, if we divide 6 by 4, you have 90 minutes, which is 1 hour, 30 minutes. So if we go from 11 o'clock and then actually have 12:30 here, and then we go from 12:30 and then we have 2 o'clock. And then we go from 2 o'clock. This is UK time. But the timings are going to be in Standard Eastern Time. I'm going to send them directly to you. We're going to go from 2 o'clock to 3 o'clock. And then from 3 o'clock or 3:30, we're going to go to 5. And then the 6-hour cycle is now, it's actually been split once again into quarters. And then what you're going to have, just make these different, is another, it's almost like a mini version of the whole day. So you could split these cycles, this 6-hour cycle, into 90-minute cycles. So now this is a 90-minute cycles within the 6-hour cycles. And you can go really deep with this. Like, I don't want to confuse you at this point, but we're now currently in live price action. We're coming up to 1:30 UK time. This here is the second cycle of the 90-minute cycle in the third cycle. How to identify this is actually your New York opening price. So if you are trading on the smaller time frame, most of your volatile moves, most moves will come for people in around about this area here, all the way up to maybe no later, I would say between the hours of 2 o'clock, English UK time, all the way up to 4 o'clock. That 2-hour window is when I want to trade. Okay. So if price action, for example, let's just say it comes back and fills this fair value gap right here, it's actually going to come lower, potentially. Now, let's say it doesn't, let's move up here. Let's say it doesn't come all the way to this opening price. So let's say it does that. Or let's say it even pokes lower. And then starts to frame a buy, for example. And let's say you took an opening here. Well, if you're under the opening price of the New York session as well, that's going to give you a highly probable move. And even if price action doesn't hit the actual true day open, you could still frame a highly probable move based upon the fact that you are below the New York opening price. So that is going to give you even more to work with. We could turn this into a maze. We really could. And I don't want it to get like that. I want it to be a lot more simplified than this. And I will talk about the cycles again soon. And I have got, if you go and have a look at the spreadsheet I've attached to this video, I've actually attached all of the relevant opening prices that you have. So this true day open is the daily cycle. But what you actually have here is more than one thing. You have true year open. You have true week open. You have true day open. You have true session open. You even have true micro session open. So I've put all of the relevant times in the spreadsheet that's attached. So you need to go and have a look, and then we can move on a little bit deeper. But this is how powerful this is. This is how the true day open came about. Hopefully you found this lesson insightful, and I will speak to you again on the next one.